Hey, everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for another video. Okay, guys, so we're going to be doing a bit of a tutorial kind of teaching video, mostly off the cuff. So I'll do my best not to ramble too much, but this video is going to be mainly focused on position sizing. Position sizing is an aspect of trading that ties into risk management, but also more importantly, and probably misunderstood, um, the most optimal way of making money, which also goes into risk management, which I'll get into as well. But let's just start off with this simple question. What is position sizing? So position sizing is essentially how big of a position, big or small of a position you have in X assets. So if you have a $1,000 account and you're going to put $100 into Bitcoin, let's say, you then have a 10% position size in Bitcoin relative to your initial principal or your total account. Okay, because $100 is 10% of $1,000. So that's essentially what position sizing is. Now, the next question that you should ask is, what does position sizing do other than what I just said? Which, it if you do it optimally, it opens you up to the most potential gains you can make in X trade or X investment, while again, if you do it optimally, while keeping your risk threshold in the ideal zone. And the ideal zone, at least in my opinion, is a 1 to 2% threshold per trade, closer to 1% if possible, and at times maybe even lower than 1%, which is great. Okay, so what does that mean? That means every trade you take, you're risking 1 to 2% of your account, not putting 1 to 2% of your account in a trade. That's one of the biggest misunderstandings I believe I've seen from most people in the trading world. I think it may be a misinterpretation of Jesse Livermore's rules. I'm not sure. But it's not about putting 1 to 2% of your account in a trade. That's wrong. And I'm going to go over why that's unoptimal. You will not make money long term, or at least you will never get to a growth scale that will change your inherent life. Okay? The goal is to put as much money as possible in a trade while staying within that threshold. If you do that and you have an optimal edge, you will start to make a lot of money. Okay, so we'll get a little bit more into that overall. So position sizing optimizes value gain, which is kind of what I just went over, right? The more money you put in, the more potential gains you can make. Okay, when it's optimized. If you do something unoptimized, the more capital you put in and you're unoptimized, obviously you can make more, but because you're not optimal, you could also lose more, right? All right, number two, protect account from future losses. And this is actually where uh, position sizing really ties into risk management because it goes into the future. When you are trading unoptimally via your size, and let's just say you have a great winning trade, you're making 10%, 20% on this trade, and you only have 1% of your account in, you've made 0.2% of your account if we're not even adding leverage. But even if you are adding leverage, wow, you're on 10x leverage, you make 10, 20%, you may make 1 or 2% on top, 200, 100% on top of your position. That's not good. If the position would have allowed you to put in 5, 6, 10, 20% of your account while still only risking 1%. If that was the case, you making 10, 20% profit on that is what is good. That is optimal. Okay. And that's what protects you from future loss. Because if you're risking 1%, we'll say per trade, and you were able to put 10% of your account in or 20% of your account in, and you put it on 10x leverage, you were still only going to risk 1% of your account if you were wrong. If you make 10% or 20% on 10x leverage with 10 to 20% of your account in the trade, well, do the math. How many 1% trades now do you have in the future? You have 10 or 20. Okay. Whereas if you only put 1% of your account in the trade, you're on 10x leverage, you double that or you triple that. Guess how many trades you got left? You got now only two. 1 to 2 more, which is not good. It's not good. All right. And then thirdly, compounding growth effect on the account. And that goes back to what I just said. It's like if you don't have optimal sizing, you're not going to make money. Okay, and variance No matter what anyone says, variance exists, and the market's going to wreck you at some point. When I say wreck you, doesn't mean it's going to take all your money, but you're just not going to perform. All right, you may have a month where you were doing 20, 30%, and then the next 2 months you're going to do maybe 1%, or you're going to be down 5%. And the thing is, you may say, "Oh, that's okay. I'll just stick it through." Well, in my experience, from what I've observed doing this for almost getting closer to 15 years, most people don't do that. If they did, they wouldn't be losers, right? 90% of traders are losers, and 90% of those traders that are losing are not consistent. And the ones who are consistently losing, they don't even last long enough to get to this point. Okay, so I personally believe that most people lie to themselves, and you can't be consistent because of a bunch of different reasons, mainly emotional, but also because most people don't even have an edge. Because if you don't know how to optimize your position sizing, you most definitely don't have an edge. I guarantee you that. Okay, and then finally, why is position sizing necessary? For everything I just said. If you can't get position sizing down, prepare yourself. You now have a new job, and that's to sit in front of a computer all day, every day, trading 1 to 2% and making maybe 0.2%, 0.5%, of your account maybe a day if you're really good. But then you're going to have a couple months where you're not going to do anything. It's just going to be a horrible experience, and you're going to get burnt out from trading. The whole idea of trading is not to have a job. The whole idea of trading is to be able to free yourself from the obligations of a 9 to 5 or some sort of wage-based job. The point is to be free, not to make this a job. And it's sad that people just don't seem to understand that. Okay, you have to understand position sizing, and that's what this video is going to attempt to do. Again, it's a very simple concept, but it gets complicated, and I'll go over why because I'm going to go over 3 different kind of perspectives. And the reason why this gets complicated is because position sizing ties into edge, and edge is exclusive to X strategy. Okay, so if you have a strategy that has an edge, it may not be the same as my strategy that's an edge, and the whole risk parameters, profit parameters can be unique and most likely are unique. So I'm going to talk from my perspective first, which is a breakout trader. And as a breakout trader, I have some of the most aggressive position sizing possible. Okay, so I have a way that I've optimized it for breakouts. Now I have a give and take sort of aspect of this where my win rate is extremely low. Okay, I have on average a monthly win rate of about 30%. Okay, so obviously sometimes it can be under that, sometimes it can be over that, but that's the average. However, my profitability is multiples. We're talking 8 to 1, 10 to 1, 20 to 1. I have trades where I've done 50, 100, 200 to 1. Okay, and those trades, they're brimming with my account. They are brimming. So we'll get like into some basic numbers here to kind of make it clear what I'm talking about. So for breakouts, because of the way it works, my invalidation. So for example, here's a little trend line. Here's price coming through that trend line. So the way I do breakouts is I'm very aggressive. I'm going to get in as price is getting through that trend line, and my invalidation is under the candle low that is breaking through that trend line, right? So whatever candle it is, that candle low, that's where my invalidation is. That's where my stop loss is going to be. So if price comes back, I'm quickly stopped out, and I'm risking on average between 1 to 2%, closer to 1% if possible. Okay, you have to deal with slippage, right? So you have to account for slippage. So if I'm risking 1.1% in this trade, slippage might bring it up to like 1.2, or if it's really bad, like 1.3. Okay, so a 0.2, 0.1 slippage, it happens. You can't get around that. But the idea is every time I take a trade, even with my low win rate, and this is actually extremely important, I am risking about 1% of my account. However, I'm able, because of how tight the invalidation is, I'm able to squeeze in 10, 20, even sometimes 30% of my entire account on leverage, still only risking 1% of my account if I'm wrong. Now, if I'm right, you can ideally you can probably envision how profitable that is. And that's actually key. That's why this is part of the edge for breakouts. If you do a 1 to 2%, position size in a trade doing breakouts, the win rate is too low to be viable. You will lose money. You need to push the edge when it comes to your position sizing. The only thing that can't change is that 1% loss. Okay. So, for example, if you had $1,000 account, you could, like very often, you'd be surprised with this sort of strategy, push your account in 10%. Okay. So $100 in a position. And if you're wrong, you're going to lose 10 bucks. That's 1% of your account. And the trade success, it depends on what the markets does, right? And it also depends on you. Maybe you're looking for 5 to 1s and you'll take some profit there. Me, for example, like again, I'm talking from my perspective. I'm very loose. I don't really have upside targets. I have points of interest. Maybe some highs, maybe like an order block, or just something like that. But I am very loose. I will let the price action tell me I need to take some off, right? And that allows for me to attempt to squeeze out as much profits as possible. And that's extremely important because the more profits I squeeze out, the more I'm protecting my account from the inevitable future losses. It's inevitable. You will lose. I don't care what your strategy is. I don't care if you have a 90% win rate. You're going to lose 10% of the time. And the randomness of the markets is you don't know at what rate you're going to lose. If you have 100 trades and you have a 90% win rate, yeah, you're going to win 90 of them. But are you going to win 10? Are you going to lose 10 in a row? Are you going to win 10 and then lose 2 in a row? You don't know at what rate those losses will come. And that's very important because if it comes in a way where you can't handle that as a person, you will start to make mistakes and that 90% win rate will drop. And if your profitability is too tight and you need a 90% win rate to be profitable, one, if that's the case, your edge sucks. I'll be the first one to tell you your trading sucks. And second, that means you won't be profitable because you're going to mess up again and you're going to keep messing up. And you might recover the next month, but then you're going to mess up the following month. You won't be around in 10 years. I guarantee it. I won't see you here. So this is why position sizing is extremely important because this is what's going to separate you from being around to being gone. Take it for someone who's been here for a long time. If you can't do this, I promise I won't see you. I will not see you. You will be doing something else. And that might be a good thing, by the way. This is not an easy business. If you can't understand this, prepare yourself. Start looking around for other opportunities. Okay? So this is extremely important, and this is the advantage of a breakout system. So this is the give and take. Low win rate, high profitability. Okay? Not every strategy is going to allow you to put 10% of your account in a trade and still only risk 1%. This is a very time validation, and breakouts is one of them, maybe the most aggressive. Okay? And then optimized position sizing allows you to go on average between 5 to 20%. Sometimes I've even gotten bigger than 20%. But you oftentimes will get at least 5% of your account going up to 20% of your account in a trade, and you'd still stay within the threshold. And this is key. This is key. So for example, if I see a trade and I like it and I'm measuring it out, what's my risk, what's my invalidation? If I put 5% of my account in, but it's still risking like 3% of my account, guess what I have to do? I either have to not take that trade because it's beyond the threshold, or I have to even lower this more. Okay, and that happens. It's rare. Usually with my system, the breakout system, the invalidation is so tight, it goes down to 5%. That's about it. But sometimes the volatility has been so big and you can have that. But again, it's like that's part of it. The key thing that is universal between all strategies should be about 1 to 2% of your account, that threshold being risked per trade. And then the thing that is going to be modular, that's going to be kind of more liquid, is going to be your position sizing. Okay? And that's tied to your strategy. Again, ask yourself, here's my strategy. I have an edge. Where am I wrong? When I take a trade, where's my invalidation? And that percentage loss on your account, you want to make sure it equates to a 1% loss, a 1% loss on your total account. So then you can then look like, okay, how much of my account can I put in here and lose 1%? That's optimal. That's optimal. Okay, here's a little bit more here. So this is like the best case scenario. Okay, that's like top tier. If I could put 20% of my account in risking one, again, just in perspective, if I had a $1,000 account and I could put in 20%, which is a $200 position, and I'm on 10x leverage, which is my average leverage, and then it goes up 10%, on 10x, I just made 200 bucks. I just made 20% of my whole account in one trade. So if I'm going to be risking 1% of my account on average per trade, I now have 20 free trades going forward. And then if I do that again, where I put 10% of my account in and I make another 10%, I now have another 10 trades or 30, 30 trades in total. And then eventually you get so much gravy, you get so much profit between you and your principal, at least with breakouts, that it becomes virtually impossible. Virtually, again, there's always a mathematical potential, but it becomes mathematically improbable that you can blow up at that point, as long as you stick to the 1 to 2% risk threshold and you continue to not make mistakes, right? You make minimal mistakes in the breakout setups, all right? So that's from my point of view. Now, this is very aggressive. There's another way of doing position sizing that's probably more tenable. It's definitely safer. The give and take of this, though, the cons of it is essentially it's going to cap your growth from time to time, and we'll go over that. So this is optimized for most other strategies. You could also do it with breakouts too, okay? But this is what you'll probably be able to do on most strategies. If you can't do this on your strategy, well, I'm going to plug my Discord. You can find the link down below for the Discord. I do free live streams all the time, but I also have services, tutoring services. I have a day trade room. We trade Monday through Friday. I still sometimes post trades on on the weekends, and then I also have a swing trade service. But I would actually tell you to come into Discord. I'll help you optimize because you need to be able to do this. If you are consistently only putting in 1 to 2% of your account in, or you're putting in your entire account, you're doing something wrong. I can promise you that you're doing something wrong. There's a way to do this, and this is universal. This is something that it doesn't matter what your strategy is. You need to be doing some sort of. There needs to be some sort of semblance of position sizing, whether it's my position sizing optimized for your specific system or fixed position sizing, which is what most people should do because most people can't handle this from what I've come to understand. So fixed position sizing, again, same thing, 1,000 account, okay? Your position size at $1,000 is 10%, is 100 bucks, right? So you put 100 bucks in Bitcoin, it's 10% of your account. But let's just say you make 20%, you make 200 bucks, right? You tripled this. Now you're at a $1,200 account. You're gonna stick to $100 while you're in $1,000. Okay, while you're in that, you're sticking to $100 per position, and that lowers your account, your position size as you make more money. Now, the good thing about that is when you're wrong, you're losing less than 1% to 2%. So your risk goes down as you're making more money on the $1,000. The con is you're also giving up the potential of more gains, like faster growth. But that's an okay trade-off for a lot of people. It helps them. So the majority of your risk is up front when you first have your principal of $1,000 and you're risking 10%. You're putting 10% of that in a trading. You're risking 1% of that. But as you make more money, that risk descends because your position sizing is going lower because your account is going higher naturally. But let's just say eventually you get to $2,000, right? You doubled your account, God willing. Then you go back to 10%, right? You're good. Now this turns into 200 bucks. And then you just do that again. Now you make 2,200. You're sticking to $200 position sizes. That's 8% of your account, and then etc. Okay, so that's a fixed position sizing. This tends to be good for most strategies. Now, 10% of your account in a trade is very aggressive. This will only be viable if your invalidation is accommodates for it, right? Maybe instead you have a wider invalidation. Maybe it's a 5% position size you can get in there. Maybe it's 7%. But the point is, it should not be 1 to 2% of your account in a trade. It should be 1 to 2%. 1 to 2% of your account is risked in the trade. That's very different. Again, I'm going to go over it again. If you make 100% on 1% of your account, you've made 1% of your account. If you make 100% on 5% of your account, on 7% of your account, On 10% of your account, you've made 5, 7, or 10% of your account. That is a different world. And that allows you to risk 8, 9, 10 more times of free money because of that. Whereas if you only did 1%, you now have one free trade. You will not make money this way, and you are delusional if you think so. You need to extrapolate your performance over 10 years, and I promise you will not make money. You will not make money. I don't know how much clearer I have to say this. You are not special in the market. You will not make money if you cannot get a position size where you're risking one and getting back multiples of one. If you're doing 1 to 1, which that's what that is, okay, it doesn't matter if your tool here says, oh yes, I got a 8 to 1 because I hit, I bought this fair value gap and then it went up to this order block. That's 5.4 to 1. No, it's not. If this is a 1% position size and you're risking 0.01 of that and you're making what, 0.2, that is dog shit. You are not making money, and you are not making 5.41 RR. You're making 5.41 RR on a 1% position size. That don't matter. You're not making money. You're not making money. You need to be able to be giving out. Here is 1%. I want multiples back of that. If you're not doing that, it's not going to work. Promise, won't work. And then now I'm going to go over very quickly the unoptimized position sizing that I find most people are doing, which was shocking, which is very shocking. This is incorrect. And if your edge demands a 1 to 2% account in a trade, you're going to have extremely high win rate for this to be viable. But my argument would be that it's not going to be viable for the next, it may be viable this year, it may be viable in the next 5 years. This will not be viable in 20 years. And it's not because the edge might die, it's because you will. And if you can't come to accept that, I don't know what to tell you. If you don't have the reflection to understand you're going to make mistakes, and the more you have to trade, the more mistakes you're going to make. I don't know what to tell you. Okay, this is a job. This is a job. If you have to sit and trade on a daily basis, and you're going to be pulling out 1 to 2% of your account, on a weekly, monthly basis, you may be able to do that for a time. You will get burnt out. You will absolutely get burnt out because there's going to come a point in time where the time that you're investing is not worth the returns. Okay? And the whole point of trading is not to have to invest ungodly amounts of time. You might as well get a job you're fulfilled at. And I mean that sincerely. Like, go do something that fulfills you. Because this is not a fulfilling thing. Looking at a chart for 8 hours a day and only pulling out 1 to 2%. It's not good. That's not good for you. It's not good. It's not optimal, and it's not good for you. And I find most people are doing this. Okay, you won't be able long term to be around and not be burnt out. So again, here's a quick little example. If you have $1,000 account and if you're doing 1% of your account in the trade, that's a $10 position size. The best maybe you could return. Maybe you have a great trade and you make $10 on your $10, or you make $20 on your $10. You're talking about 1 to 2 times uh, of 1%. That's not good. Even if this is $1 million account or $100,000 account rather, and this is $1,000 position, you make $1,000 to $2,000. Like, that may seem good. That may seem good as an income, but that's not actually good relative to your account, and it's not sustainable. That's the other thing. People have been hoodwinked into saying I can make 1 to 2% a day. No, you cannot. Okay, no, you cannot. Go look at the best performing hedge fund managers and retail traders. They can do that for a time, but you will find very quickly these guys who've been around for 20, 30 years, and I've been around for almost 15 years. There will come points in time where you will be in a market environment where that is just not possible. You are not a machine. There is decay in your edge based off the market environment. Okay? And you need to be able to make enough money when your market environment rolls around that when you are done in that environment, which will happen, right? Whether it's a bull market, bear market, a ranging market, when that comes to an end, you've squeezed out as much value as you can. You are free. You are free to either go do something else, take a vacation, open up other lines of opportunity. Maybe it's getting into business investment, other things. Okay, but if you continue to trade in the environment you're not healthy in, your edge is not healthy in, you will give back so much money. And yes, you may end up sticking it through and making it through, and you lost 20-30% of your gains, but you kept the 70%. Now your market environment's back and you make more money. That may work for some years, but you're going to find yourself in the next 10-20 years not in a mostly different place. Okay, you just replaced one salary for another, and that's not what this is supposed to be. This is not supposed to be a job. This job is horrible. Okay, this is not a good job. This is supposed to be a way for you to beat inflation and to have the time to do the things you want to do, to be fulfilled. Trading is not fulfilling, not for long periods of time. It may be fulfilling right now while you're on your journey and learning how to become a trader. But when you actually become a trader, when you have your edge quantified, when you know what you're doing, it becomes boring. Okay? And the main issues you have are not really trading, it's your emotional place. It's it's you being consistent, policing yourself. When that happens, over a period of time, trading is not fulfilling. Okay? Like it's just not. Now, you may not know what I'm talking about. Maybe you're not there yet, but you will. You will know what I'm talking about. God willing. I pray you do. I want everyone who watches this to become a successful trader, a consistent trader, a consistently profitable trader. Not rich. I don't know if you'll become rich. Okay? Becoming rich is a totally different thing. But becoming consistently profitable. But becoming consistently profitable does not mean that this is supposed to be your job. You treat it seriously, but this is supposed to open up other lines of opportunity. That's what this is supposed to do. That's the way to be happy, in my opinion. My opinion. Now, you may disagree with me, and you're fine to do that. But take what I'm saying here seriously. Start to think about, is my position sizing optimal? And when you take a trade, do the math. Say, hey, I have $1,000, $10,000, $50,000 account, a $500 account, and I'm about to take this trade by invalidations here. How much, if I'm wrong, how much am I risking? If I am I risking 0.5%? Is that really enough to be risking? Should I be putting in more? What's my win rate? What's my profitability? If you don't have those answers to those questions, you first off, you haven't quantified your edge, which you need to be doing. Back test and forward test. You need to quantify that. You need to know how many wins and losses in a row on average. What's the upper deviations of your losses in a row and your lower deviations of wins, right? What you need to know that. And if you do know that, you can optimize your position sizing. And if you do that, you will start to grow. You will start to see that equity curve grow like crazy. All right? Okay, that's it. That is it. Off the soapbox. But if you want to learn more about position sizing, you come join the Discord down below. You'll find the link down below. And again, I'll go over it with you like during maybe one of my live streams, which I do very often. And then if you want to get deeper in this stuff, I have tutoring sessions, tutoring services. Like you can look into the pricing and all that of that stuff. Again, found in the Patreon link down below or in the Discord. Yeah, that's it. So, guys, if you have any questions, if you agree or disagree with anything I've said, please leave a comment down below. I will definitely be interested in reading that. And we will do this again soon. I will get back to making more videos, I hope, more consistently at least. And guys, I just want you to always remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.